Hey there, ever get your payslip, look at that take-home number and just think, where on earth did the rest of it go? Well, if that sounds familiar, you're in exactly the right spot. We're about to untangle the world of UK income tax. Now, this whole discussion has been put together for us by the experts over at My Tax Accountant. They're the pros, and they've helped us make sure everything you're about to hear is clear, simple, and spot on, so we can finally make sense of the UK tax system together. You know that feeling, right? That brown envelope with the HMRC logo lands on your doormat and your stomach just does a little flip. We've all been there. But honestly, it really doesn't have to be so scary. So, okay, let's get into it. And that's exactly what we're going to do. The goal here is to swap that feeling of dread for a bit of confidence. By the end of this, you're going to have the key bits of info you need to feel way more in control of your money, especially as we look at the 2025 to 26 tax year. All right, let's kick things off with the most important part, the real foundation of the whole system. We're talking about the amount of money you can earn before the taxman gets to take a single penny. Okay, this number right here. This is the big one. If you remember anything from this, remember this. £12,570. That's your standard personal allowance. It means every penny you earn up to that point is all yours. No tax. Simple as that. So what happens when you earn more than that? Well, that's when HMRC starts to pay attention. We're talking about the obvious stuff, right? Like your salary from your job or profits if you're self-employed. But it also includes things you might not immediately think of, like most pensions, yep, even the state pension, and certain benefits you might get from your job. But here's the good news. It's not all about what they do tax. It's just as important to know what they don't. Not every bit of cash that comes your way is on their radar. You've got things like income from an ISA, any dividends under your allowance, and yes, if you win the lottery or on the premium bonds, that's all yours. Even the first grand you make from a side hustle is usually safe. Okay, on to the next piece of the puzzle, tax bands. This is where it can feel a bit confusing, but I promise, the idea is actually pretty straightforward. Think of your income like a loaf of bread. You don't tax the whole loaf at one rate. You tax each slice differently. So this table here is basically your map. You see that first bit, up to £12,570? That's your personal allowance slice. Zero tax. Then the next chunk of your income, up to about 50 grand, falls into the basic rate. You only pay 20% tax on that slice, and it keeps going up from there. It's all about the slices. And this is the bit that catches so many people out. If you earn £50,000, you are absolutely not paying 20% on all of it. No way. You're only paying that 20% on the slice of your income that's above your tax-free allowance. So for a 50 grand salary, the final tax bill comes out to around £7,500. Now, a really important heads up here. If you live in Scotland, things work a bit differently. Scotland has its own tax bands, and they're not the same. You can see it right there. On the exact same $50,000 salary, you could end up paying over £1,000 more in tax. So it's absolutely crucial to know which rules apply to you. Right, let's get down to brass tacks. How do you make sure the right amount of tax is actually coming out of your pay each month? Well, it all boils down to this one little thing called your tax code. The easiest way to think about your tax code is like a little instruction manual for your employer. It tells them, hey, this person gets this much tax-free pay. For most of us with one job, it's going to be 1257L. The numbers just mean you get that £12,570 allowance we talked about. See? Simple. So, how do you check it? It's genuinely easy. 1, grab your latest payslip. It's right there. 2, log into your government gateway account, your personal tax account, and see what they've got on record. And 3, if something looks off, get in touch with HMRC. Seriously, spending 5 minutes on this could save you a ton of cash and a massive headache. And if you're thinking, is it really that important? Just listen to this. We heard a story about a guy named Tom from Birmingham. His wrong tax code meant he overpaid by £2,100, £2,000, all sorted with a quick phone call. It just goes to show how a tiny little error can have a huge impact on your wallet. Okay, so there you have it. You've got the key pieces now, right? You know about your personal allowance, you get how the tax bands work in slices, and you know just how vital that little tax code is. You are now officially equipped to take a look at your own tax situation with confidence. But maybe this has brought up more questions. Or maybe you're thinking, I'd rather a professional just sort this out for me. And that's totally fair. That's where the team at My Tax Accountant come in. Here's how you can get in touch with them directly.
You can give them a call or even just send a WhatsApp to 07854 255 375. Or if you prefer, just pop an email over to info@mytaxaccountant.co.uk. They're there to help with any personal tax questions you've got.
So I'll leave you with this question to think about. Now that you know all this, what's your first move? Are you going to go dig out that payslip and check your tax code? Or are you going to log into your gov.uk account? Whatever it is, just remember, a little check today can make a really big difference to your bank balance tomorrow.